Hi, this is Zach Meir from Zach's Traders Cafe with a look at some bulletin board hero stocks on Friday the 24th of June. Starting off with Alexander Mining, where you can see there's been decent base building since February towards 0.1 pence. The likelihood now is that we'll remain above the floor of this rising trend channel from January, and the while above it at 0.15 pence. The big target here is 0.5 pence over the next 2 to 3 months. If you're cautious on the shares, maybe wait for a clearance of the 200-day moving average at 0.25 pence. Next up is Amio Minerals, and here we've got a situation where there's been decent bounce off this support zone at around the 3.5 pence level. Looks like a falling wedge situation, and obviously with the revival in precious metals on the Brexit news, this could be a contender for a little bit of a rally. If you're cautious, you maybe wait for a break of the 50-day moving average in this December resistance line at 4.58 pence before going long, but looks as though enough work has been done here to give us the big target 7.7 pence over the next 2 to 3 months. Even for those who are not waiting for the momentum buy trigger. Ferrum Crescent is next, and here decent building here within the framework of an uptrend line from March and the 200-day moving average at 0.25 pence, let's say. Big target here as high as 0.8 pence over the next 2 to 3 months, especially if we can get a decent weekly close above the 200-day moving average this week or next week. Stop loss back below, let's say 0.17 at this stage. Onzima Minerals is next. Interviewed one of the investee companies, N4 Pharma, yesterday. Bull flag situation here above or at and around the 1.5 pence level. Support likely to come in at the 20-day moving average and the floor of this rising trend channel at 1.35 pence, and really while we're above that, the big target here over the next 2 to 3 months is 2.5 pence, possibly even a bit more actually. You can see that line heading to 2.7 pence. If you're cautious on the stock, maybe you'd wait for this resistance here around 1.75 pence to be broken before making the move as far as going long of that situation is concerned. Haven't looked at Sovereign Mines of Africa for quite a while, largely because the shares have been rather bombed out. But we have got this extended support now above the, at and above the 0.2 pence level, which has been in place since January, and looking for a trajectory towards the 0.6 area, especially if we can get a decent end of week close above the 200-day moving average at 0.36 either this week or next week. Finishing off with that private investor perennial difficult situation, which is Excite Energy. Obviously there are high risks here, but at least at the moment this share seem to have seen this support line from December running towards the let's say the 5.5 pence level, and while we're above that, there's a chance at least of a dead cat bounce back towards former May support at 10 pence. But at this stage, that's probably the most positive you can be about these shares, as they have obviously disappointed on many occasions in the past. Stop loss to be rigorously enforced, obviously. That's it from me. More updates at the same time on Monday.